All the way up, Lydia.
Good morning. Welcome to the All the Way Up radio show. I'm your host, Lydia, your favorite accountant. I'm always excited to be here with you on Wednesday morning. Missed you since last Wednesday, and thank God to be here on this Wednesday. Again, you're listening to the All the Way Up radio show, Lydia, each and every Wednesday on your all-new Power 88 KCEP. Thank you to everyone in the studio to help make this show possible, to help produce the show. I'm just excited to be here, and I'm loving this weather we're having. This is really cool weather. The sun is just not beating down every day, so I enjoy the rain, love the rain, and welcome the rain. So it's been great these last few days here in Las Vegas. Today's show is sponsored by Precise Business Management. For all your accounting and tax needs, give Precise a call for your accounting services if you're a small business owner and you're looking to get some support with your finances and being able to get your accounting in order. Give Precise a call at 702-781-8814, 702-781-8814. 702-781-8814. So today we're going to be talking about, again, tax planning. We are in month 7 for this 2020 year. It's just going by so quickly, and I hope everyone's following their budgets. If you have budgets and plan in January, how is it going? Are you following your budgets? Are you in good with your finances? I want to know. I want to hear from you. I want you to give me a call in to the station, or call in if you have any questions, or to talk about your finances or your taxes or any questions you may have with regards to finance, tax, or your business. Give us a call in, and we'll be able to answer any questions that you have. Today we're going to talk about tax planning and what that looks like. It's so important to have tax planning. We plan for everything else. We plan for vacation. We plan for our kids' college. We plan to go out on date night. We plan so many things with regards to what's important to us, but we do our taxes. We don't plan for our taxes. We just do them. Come January, we're just doing our taxes, and we just, whatever the result is, we're like, okay, we're getting a refund, great. Or we owe, oh my God, how much that is. We want to make sure that we are preparing for our taxes throughout the year. Preparation is so important when it comes to our taxes. So like everything else that's important in our life, planning to buy a house or planning to do that next step in our journey, we want to plan for our taxes. It's important. It's proactive and being timely, and to be able to produce savings for your business. Not only your business, but your personal taxes. And consulting with Precise Business Management or myself to be able to help you. I'm here to help you throughout the year. The tax year allows us to be able to look at purchases that you may have made throughout the year, or selling your business, or starting a new business, or construction for a new building, or acquiring a business or a new asset, buying equipment or a big asset with regards to your business. It can save you time and a lot of expenses, being more efficient when it comes to your taxes and any party that's involved with regards to any assets that you're purchasing. So with all the new legislation that comes out on a regular basis towards the end of the year for new tax season, you want to be timely. And being able to have a meeting with a tax advisor or a tax professional like myself helps you when it comes to the end of the year and you are ready to do your taxes and you're not prepared and you're just getting prepared in those last quarter of the year. You're rambling in November and December and October. Let's be more proactive with regards to our taxes and to be able to take those savings and reduce those liabilities that you may not be aware of. There's different strategies when it comes to taxes. And the primary strategies is being able to reduce your overall income. And that's what's important. Increasing the number of tax deductions throughout the year and taking advantage of any tax credits that you may not be aware of so that you can implement them and put them in place throughout the year and not just worry about them in the fourth quarter. So today we're just going to talk about being proactive. Again, this is Lydia, your favorite accountant. You're listening to the All the Way Up radio show. and we're talking about tax planning throughout the year. So it really starts when it comes to tax planning and understanding your tax bracket, because it grows throughout the year. If you're getting increases, if you're starting a business and you have additional income, if you're doing something on the side, you have a side hustle and you're going to be getting a 1099 at the end of the year. So if there's any means of increasing your revenue or increasing your income throughout the year, you want to make sure that your tax bracket hasn't shifted or changed throughout the year, and that's so important, and that's where it starts. So you really want to plan for your tax future, and you can't do that if you don't know where you are today. Like in July and August, it's so important to know where you are in advance so that you can then plan for a better tax result when it comes to April or March, depending on if you're a business owner. So it's so important to be able to first plan. And the one tip is to know what your tax bracket is. And United States is a progressive tax system, which means that people with higher taxable income are subject to higher taxable rates, while people with lower taxable income are subject to lower taxable rates. So there's 7 different federal tax income brackets. You got 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So no matter which tax bracket you're in, you probably won't pay that rate on your entire income. So you want to be mindful that you just don't take that your year to date and tax it by your taxable rate. That's not the way that it works. So it's subject to different tax deductions. So you will get your taxable income deduction that you usually have, depending on if you are single or married or head of household or separate. So you'll get that standard deduction on your taxes, as well as we don't multiply that rate by your taxable income. Instead, the government divides your taxable income into 2 different chunks. So you won't have to worry about that. So, for example, if you're single and you make $32,000 a year taxable income, and that puts you in the 12% tax bracket for 2021 or 2022, but you don't pay 12% on the whole $32,000. So if you make $32,000 and you're single, you won't pay that 12% on the whole $32,000. You only pay 10% on the first $9,950, and you'll pay 12% on the rest. So if you had $50,000 taxable income, you'll pay 10% on the first $9,550 and 12% on the rest of the income, which would be the $40,525. So you just want to be mindful of what your tax bracket is and where you fall and how much your taxes will be. And you can do that all in tax planning. So it's so important to be able to plan in advance. And then we're going to talk a little bit about those estimated tax payments and being able to be mindful of what they are and the dates that they are due. So again, you're listening to Lydia High, the All the Way Up radio show, Lydia High, and you can reach us at 702-781-8814, 702-781-8814, 702-781-8814. So if you're the individual that didn't do your taxes last year and you thought, okay, April 15th is over, that means that you don't have to do your taxes. No, that's not true. You want to be able to get them done and completed. Now is the time where it's pretty slow and you can get your taxes completed. I always want to be mindful, if you filed an extension, that October will be here. It's right around the corner. So if you filed an extension to get your taxes completed by October, that does not mean that your tax obligation that you owe is not due. Your tax obligation is due on April the 15th. So you want to know what that is if you owe before October. So it's good to be able to have that tax planning in place. I hope all of my taxpayers that owe are making their estimated tax payments on time, because there is a penalty for that. So we just want to be mindful of the things that need to be completed now throughout the year. Once tax season is over, there's still things that need to be completed, which is our estimated tax payments If we haven't finished our tax returns and we have an extension, we want to get that done by October. And the sooner the better. You don't want to wait until October to go in and start rushing to get your taxes done. So we want to get them done sooner than later. So I'm just going to talk about some tax saving strategies that you may not be mindful of that you can be putting in place right now, and that is maximizing your health savings account. So if you have an HSA contribution for 2022, you can contribute up to $36,500 for individual coverage and up to $7,300 for family coverage into your health savings account. So remember, you want to make sure that you're using it so you don't lose it. So if you need to withdraw from it for medical expenses, allow for that to be calculated. And you want to consider investing money to provide a chance to grow in your retirement. So if you want to invest additional money that you may have, you want to look at those areas that you can make those investments, and make sure you are keeping detailed records with regards to your health saving plan for taxes at the end of the year. And we want to second to optimize your 401k. So for the first time since 2018, the IRS increased the 401k and the 403b contribution limits. So you can contribute up to $20,500 for 2022 so that you can catch up. If you're age 50 and older, you want to make sure that you are catching up if you need to. But for that amount, you can still contribute $6,500, which hasn't changed. So you can contribute to $6,500 a year. And you want to look at that to make sure that you're maximizing your contribution each year so that helps you with regards to taking a deduction for that contribution for next year. So you want to also develop a tax payment strategy. Like I said earlier today, if you have estimated tax liability, you want to make sure that you have a strategy in paying that. Even though we are halfway through the year and payments were required, you had a payment that was due in April, a payment that was due on June the 15th. Your next payment is due September 15th, and then your final payment is due January 16, 2023. So anyone that has estimated tax payments, just make sure that you're making those payments on time. They're due quarterly, and these are the dates that they were due: April, June, September, and January of 2023. Again, you're listening to Lydia, your favorite accountant, and you're listening to the All the Way Up radio show. And we're talking about tax planning and how important that is with regards to planning for your taxes. We plan for everything else. We plan for vacation. We plan for our kids' retirement. Our kids' college fund, our retirement. We plan for so many things. We plan for events. We plan for parties. You want to plan for your taxes. You just don't want to just do your taxes. You want to make sure that you're planning for them so that you can reduce your liability and get the best taxes for your for next year, to be able to get the best tax rate for next year. Not only to get the best taxes for next year, to reduce your liability and get a refund, ultimately get a refund, or not have to pay so much. Always I hear people saying, I pay so much in taxes, I pay so much in taxes, I don't want to pay so much in taxes. This is a way to prevent that. If you start planning and you talk to a professional in advance, then this is a way to be able to prevent that. So definitely you want to look at these different strategies that can help you to reduce your tax liability. You could also, if you're fortunate enough to have a surplus of income, definitely consider contributions, to increase your contributions this year, or to be able to give someone a gift. It's always great to be able to give someone a gift. So if you have a lot of discretionary income and you want to give someone, you can give up to $16,000 per person for as many people as you like. So if you want to give a gift to your children, or you want to give a gift to someone that you love or care about, one of your loved ones, this reduces your tax liability as well. You can gift up to $16,000. So there's a lot of things that you may not be aware of during this tax year that you can take advantage of that you're not taking advantage of. So you want to sit down and talk to a tax professional And again, I'm here for you to be able to go over any credits that may apply to you, any deductions that may apply to you. And this is the time that you want to do it. You want to give me a call when it's slow and it's not as busy. During tax season, you really can't talk to a tax preparer, a tax professional, because it's so busy. This is the time that you want to do that if you have any questions with regards to your taxes, or if you haven't filed your taxes. If you haven't filed your taxes, you're still liable for having your taxes completed and done, and this is the time to be able to get that done. You always want to make sure that you're looking at what your income is, what your expenses are, and being able to reduce them in any way that you possibly can. So it's so important. Each show, I always give a quote. So it's my quote for today is a business quote to business owners: is your work is going to fill a large part of your life, and the only way to truly be satisfied is to do what you believe is great work. And the only way to do great work is to love what you do. Steve Jobs. So if you are a business owner or a sole proprietor or entrepreneur, you want to make sure that you're doing something that you love. What I was reading the other day, I discovered is that there's individuals 50 years and older that are starting new businesses at a high rate that's been growing over the last 20 years, and it's accelerating since 2010. So many of these new entrepreneurs are using skills that they develop in their career and to be able to be successful in business while enjoying the experience that they can work for themselves. So again, if you're in the age group of 55 and 64 and you looking to start a new business, I applaud you. I definitely applaud you. Learning so much that's new and having the desire to be able to do something you've always wanted to do. So I definitely applaud you. And I say that because we have a workshop that we are conducting right now, the Small Business Workshop. So it's for new business owners or existing business owners to be able to go over your financial statements. We have a financial advisor, Sabrina Hayes, an attorney, Michelle Nisi, which has been on the show a few times. You know them, familiar with them, and an accountant to be able to go over if you want to start a new business, if you have an existing business, e-commerce. The number one thing that we're going to talk about, which I'm really excited about, is recession-proofing your business, because right now we're in a recession, whether you are feeling it or not. We are in a recession, or it's coming down your street. If you're a business owner, pretty soon you're going to feel some sort of impact from the economy right now. So we are doing a segment in the Small Business Workshop or recession-proofing your business. So if you're a business owner and you want to know some ideas or tips or being able to put strategies in place with regards to your business to help limit the impact of the recession, call us and sign up for the workshop. It is on it's on Thursdays from 6 to 7 p.m. Thursdays from 6 to 7 p.m. Again, this is the All the Way Up radio show. You're listening to Lydia High, your favorite accountant. And you can give us a call at 702-781-8814, 702-781-8814, 702-781-8814. So I just applaud each and every person between the ages of 55 and older that is launching out to start a new business, to be able to be a consulting, or just take their experience and from their career and to launch out and to do something new, because we're living longer. People are living longer into their 90s and into their 100 years old. So if it's something that you are embarking on, I applaud you and congratulations on that. Would love to be able to see you in our workshop, to be able to help you, to support your effort in what you're doing. That's what I'm here for. Just like the quote that I said, I truly love what I do, So it doesn't feel like work at sometimes. I just really love what I do, and being able to help small business owners or just individuals to reduce their liability and help them with their taxes. Sometimes it's really daunting on people to be able to say, just taxes, I get anxiety. I get nervous when it comes to taxes, especially if you're a high income earner. You're always concerned about that tax bracket you're in, how much I'm going to owe, how can I reduce my liability, what can I do, how can you help me? And I am here to help you and to walk you through that. So give me a call at 702-781-8814, 702-781-8814. Don't do it alone. Don't walk alone with regards to your taxes, and to be able to see if there's any credits that you're not aware of. I was just sitting with a client on yesterday, and we did some tax planning, and they weren't aware of some credits that they may be able to take advantage of. And he was like, God, I didn't know that. I didn't know that. So it was several things that was brought to his attention with regards to taxes. And we sat down in the month of July. So it gave him so much more time to implement some of the other strategies that we put in place before the end of the year, and to be able to reduce his liability, because he's increasing his income this year, and we want to make sure that he's putting the right things in place with regards to his business as well as his taxes. So tax planning is so vital to your business, and it's so vital to you if you want to reduce that liability and be able to use that additional income, again, for travel, to do other things. So if you are listening and you last year was an individual that just did your taxes, I'm just going to get my taxes done, I'm not planning for them, and when you sit down, you have no idea what the result's going to be, no idea what is going to happen after your meeting with your tax preparer for next year. You don't want to be in that place. You want to be ahead of the game. You want to be prepared. You want to know what that looks like before the end of the year. So you're going into doing your taxes. You already know, again, where you stand, because you had tax planning in July or August or September. So give us a call so that we can put you on the calendar and sit down and go over your taxes, especially if you was an individual that owed a lot last year and you don't want to have to go through that again. So again, you're listening to Lydia. Hi, your favorite accountant. And this is the All the Way Up Radio Show. And you can give us a call at 702-781-8814, 702-781-8814, 702-781-8814. And we will schedule an appointment for you to come in and go over your taxes. So what you would need to bring in is your last year's tax return, whichever year you filed, to bring in that year tax return, to bring in your financials, your profit and loss statement, to kind of go over what you're spending, what that looks like. The main categories that we always look at when it comes to tax planning, when it comes to businesses, is to look at your profit and loss statement, your balance sheet, to look at your assets, what can be depreciated and what can't be depreciated. Because right now, the depreciation regulations is changing. We will be able to depreciate 100% of your asset in that current year that it was purchased. Well, that legislation is changing, and it is fading out in year 2023 through 2025, where you won't be able to depreciate 100% of that asset anymore. So again, if you're looking to reduce your liability and you want to depreciate 100% of your assets, we want to look at purchasing them now in this current year before that legislation phases out, and what that looks like with you. So everyone's circumstances is different, and I will be able to look at your particular circumstance to see what helps you and benefits you. So just be mindful of that. And the business and entertainment credit is always something we want to be mindful of as well, because that fluctuates on the percentage that you can take from meals and entertainment, 50% or 100%, depending on the meals or the entertainment and who's participating in those events. So you want to be mindful of that and just not have your bookkeeper or accountant just throw it all lump sum into one category. At the same time, you want to be mindful of keeping your mileage log. This is something that's so critical and so important in keeping your mileage log. So if you haven't been keeping up with that throughout this year, take a good look at it and just be mindful that you want to make sure you're keeping track of your miles, because that's a huge deduction, and that you are recording that, and you have something, a platform that you can do that on, or a device that you can do that on. So if you haven't been doing that and keeping mindful of that, you want to be in consideration to know that it's so important to have your mile logs and being able to keep up with your miles when it comes to your taxes. So those are categories that you want to be mindful for now throughout the year. That's going to help you to reduce your liability at the end of the year. Again, this is Lydia High, your favorite accountant, and you're listening to the All Your Radio Show. And if you're a small business owner, I want to see you in this workshop. If you're looking to start a business, I want to see you in this workshop. You'll get an opportunity to sit down with a financial advisor, an accountant, and an attorney for 10 weeks, and to be able to talk about your particular business and how to grow your business. Sometimes we go on Google and go on the internet and try to research so much information, but you want to get the information about your business. How can it help your particular business, your particular industry? And you're not in a position where you're just getting generalized information. So if you're interested in participating in this workshop, and we partner with Nevada Grow. Nevada Grow allows us to give some individuals, business owners, grants for the workshop. So if you are a business owner, you may qualify for this grant through Nevada Grow for our small business workshop. So give us a call if you're interested. I think education is so important. Continued education is vital to your business, and being able to understand what compliances are needed that you may not be aware of if you're a new business owner, and to be able to learn about different entities, that your business is structured in the right entity, a sole proprietor, a S Corp, a C Corp, a LLC, that you're in the right entity, what that looks like, and to know the startup expenses that you can write off. And we talk about grants. We talk about grants for minority-owned businesses and how you can qualify for a grant for your business. So it's a wealth of information in the 10 weeks that I can't possibly go over. I always say I have more information than I have time, and I want to give you as much information as possible. So give me a call, or call in anytime on the station if you have any questions, or you can reach me again at 702-781-8814, 702-781-8814, 702-781-8814. Again, this is Lydia Hyde with the All the Way Up Radio Show, and just bringing you information to be able to help you reduce your tax liability, to get the best out of your business so your business continue to grow and scale. If that's something you want to do, you can reach us on Facebook or Instagram or LinkedIn. If you have any questions, you can always give us a call at our office at 702-781-8814, 702-781-8814. Again, this is Lydia High, your favorite accountant, each and every Wednesday here on your all-new Power 88 KCEP. Until next Wednesday, be blessed and be safe, and I'll see you next week.